Hello traders, welcome back to another episode. Today's video, we're going to be doing a forecast for the following pairs. And this is including Pound USD, Gold USD, and US30. In this video, I'm going to be explaining a few things. You'll be learning how to map your high time frames to the lower time frames, technical analysis. This is including breakout structures, learning how to mark your supply and demand zones, learning how to identify liquidity zones, imbalances, breakout structures, and so on. So if you are brand new to the channel, please consider subscribing to the channel. I always try to simplify things and not make it complicated so that even a 5-year-old can understand what I'm trying to deliver here. My name is Jamal, by the way. Welcome back to the channel. Let's get into it. So this is, first and foremost, this is Pound USD. All right. And happy New Year's to all of you guys. Okay. Pound USD. So what do we have on Pound USD? First, what we do is we start from the higher time frame, like the weekly time frame, because we're trying to get the bigger picture before we go down to the lower time frame. Looking into the higher time frame will tell you what's happening on the bigger picture rather than focusing on the lower time frame and getting confused of the price action. Okay, there's a lot of noises on the lower time frame. So anyways, here, let me just zoom. What do we have here when we look at the price? We have two things. Number one, we can see a price is trading between this high and this low. So you have to identify your range, your weekly range. This is called weekly range. All right. What do we have after that? We have a valid break of structure. For those who don't understand break of structure or not familiar with smart money trading, I have an ebook and the link is in the description down below. Go check it out. All right. So we have a break of structure. Price created a low, trading lower than the last low on the weekly time frame. Okay. So now price is trading between this high and this low. But in between, what we're looking for is we're looking for a supply zone. When the price is selling, we look for a supply zone. And when we're looking for a buy position, we look for a demand zone. So market always creates supply and demand zones. And here is how it looks like. Let's say price is ranging right here. This is very important, okay? And then price created a break of structure or a breakout. Now we can see that there's some type of there was a supply that was in control, but then price created more demand. That means more people are willing to buy this pair. Okay, if they buy in Pound USD, that means they buy in pound and they're selling USD. So now what we're waiting for is we're waiting for our demand zone to be mitigated or to price to return to the area of demand zone to rebalance the price and then continue to the upside. That is a concept of demand zone. And the concept of supply zone is basically, let's say price is trading sideways, created a break of structure or a breakout. Now price has created an insufficient price action or imbalance of supply. So now what we need is we need the price to go back to tap on an area of supply zone and then create a change of character and then continue to the downside. So this is the concept of supply and demand zones, if you understand. I'm going to make a video about it, and I have a couple of videos speaking about this concept. You can go ahead and check it out in my channel. But by the way, our video today is just to forecast these three pairs. Here, we see price creating a break of a structure. Now we went ahead and marked our weekly range, which is this high to this low. But then we need to find where price reversed. We can see this is an area of imbalance here. And when I'm marking the imbalance, sometimes what I do is, if there is a supply area, because a supply area has to have an imbalance, an order block and supply zone is almost the same thing. There is no difference, okay? we can see this is an entire zone. So we went ahead and marked that entire zone. Remember, we have an imbalance between this low and then this high. So price will probably trade between this area here, which it did, and we can see that price reversed from the area of supply zone, surpassing the imbalance and filling the rest of the imbalance or the insufficient of price action, which was created when the price was ranging here and then created a drop like I showed you. It left an imbalance and price rebalanced it right here. All right, so now let me make this very clear. Supply zone. If you wanted to, you can basically refine it and mark it to the week, and this week, which is where price is trading at this moment. Okay. All right. Now we can see on the weekly time frame that price took out an area of inducement slash creating a change of character. How do we trade inducements? Inducements can be used as a change of character if price taps on a higher time frame supply zone or a higher time frame demand zone. So now that price tapped on a higher time frame supply zone, this inducement area will turn into a change of character. So what is an inducement? An inducement is a place where banks create, or the institutions or the big traders, they create it in order to trick the traders and think that the market is going to reverse from here, but they're going to drive through it and then they reverse right after that. What else do we have on the lower time frame? So this inducement, like I said, turned into a change of character since it tapped on a higher time frame supply zone. All right, here we can see that we have an area of demand zone on the weekly time frame. Very important. So we try to build a story and find out what's happening on the higher time frame before we go down to the lower time frame. What do we have after that? We have price creating. Let me go to the daily time frame real quick. So we're gonna go from there. We had what we needed on the weekly time frame. Now we want to check out what's happening on the daily time frame. So on the daily time frame, price created a change of character. Now price was trading between this low and this high. Now we want to go ahead and mark our area where we think price will reverse and continue to the downside. But right now we see the price creating higher highs, higher lows on the daily time frame. So first thing first, we're going to go find out where we think price might reverse. We can see a candlestick here trading above this candlestick. So this means there was a liquidity grab that happened before the price continued to the downside. Okay, we can see the momentum, we can see the size of the candles, we can see the rejections. So this area becomes a very important supply zone. All right, very important supply zone. As you can see, every pullback here is already been mitigated, and the only area that's not mitigated yet is this beautiful candlestick right there, which is our supply zone on the daily time frame. Let me go ahead and mark this real quick. All right, what is the price doing right now on the daily time frame? Number one, we have our daily range, price trading between this high and this low here. But we can see on the higher time frame, price was trading basically reversing to the downside. But on the daily time frame, we can see the change of character, and we can see now price trading back to a supply zone. So what is this? This is what we call a counter trend or a pullback. Okay, a pullback, we wait until the pullback reaches an area of supply zone, but also as long as we know what the higher time frame is doing or what's going on in the higher time frame, we can trade this until the price reaches an area of reversal before it continues to the downside. So as a trader, a lot of you guys have been asking the question of how do I take advantage of the counter trend if it takes a long time to wait for opportunity when you're trading the higher time frames. All right, so here we can see price is trading high highs, high lows, high highs, high lows, and then high highs. Why did I skip this area here? I'll tell you why I skipped this area, okay? Let me go back here. Okay, the reason why I did not mark this as a high high is because first we have a low, high, high, low, price creating a break of structure, high, high, and then high, low, and then this is our higher high right there. Why did I do that? Because this candle here did not trade above the buy candle right there. So therefore, this becomes an invalid pullback, okay? An invalid pullback. So you got to be able to identify pullbacks too. If you want to watch my how to identify pullbacks, I'm going to make more videos about that. You can go to my channel and find out the video that explains how to identify valid and invalid pullbacks. All right. You can also get that information in the ebook, well explained. All right. So here we can see price creating high highs, high lows, high highs, and each time you can see a price respecting an area of demand zones. Because when the price is buying, in a buying state, we always look for a demand zone. So we have a high high, high low, and then we have a higher high. And why did I not mark this as a high high? I'll tell you why. Okay, by this time you guys already understand how to identify pullbacks. So you can see this bearish candle did not trade above this bullish candle and did not trade below this bullish candle. If you went below this candle, this will be a valid pullback. But since it did not trade below this beautiful bullish candle, which created a high momentum before the break of this entire structure here, price did not trade below this bullish candle. So therefore, we mark this as one entire move. So this becomes one entire move. All right. So we can see that the daily time frame is telling us that price did not find a reversal yet, and now it's continuing to the upside until it finds an area of reversal before it continues to the downside. The price always has to find an area to reverse from, and without that, price will continue either up or down or sideways. Anyways, so higher highs, and then we're going to go ahead and mark our higher lows, and then we're going to go ahead and mark our higher highs. So what is our daily range here? We can see price is trading between this low and this high. Very beautiful. All right. Where do we think is an area of demand zone in this case? Let me go to the 4-hour time frame. Remember, we marked on the daily time frame that price is trading between this low and then this high. But a lot of traders, what happens is they think this is a valid higher low, and then they buy, and then what happens is they get trapped because price now is creating a sideways momentum. We can see that price is basically respecting the lows and respecting the highs, taking out liquidities as it goes by. Okay, all right. But on the high, based on the higher time frame information, we know that this is the range that we are looking at, this low and then this high. So now I'm gonna go ahead and mark my area of demand zone. All right. Now let me go to the 1-hour time frame. We need to refine this area very much. Go all the way down. On the 1-hour time frame, we can see that this area becomes very important. If price comes back to this area later on in the future, we are going to be looking for a buy position. And if price trades below this area, we're going to be looking for a sell position after price reverses from a supply zone. But this time we can see we have a valid area of demand zone. Let me go ahead and mark this real quick. Beautiful. All right. What else do we have on this time frame? We see that price is building some type of liquidity. We see that there's also an area of imbalance. Let me go ahead and mark this area of imbalance. An area of imbalance between this low and this high. Price did not touch this area yet. It touched a little bit right here, but I believe that price is going to come all the way down here before it continues to the upside. All right. So this entire area will become what we call a liquidity slash inducement. All right. So what we're expecting is price to basically go back to, since it has this little bit of minor break of structure here. So what we're expecting is price to come all the way somewhere here. And then continue to the downside, take out all this liquidity, and then reverse from this area here to continue to the upside. So this is what we are looking for with the GBP USD. That's how we are looking at it. So, all right, that's how we're looking at it before the price continues to the upside. Remember, on the daily time frame, we're trading this our daily range, this low, and then this high. Because when you go to the daily time frame, it is very clear, and you can see it until the price reaches this area. We're not selling. We're looking for a buy position until the price comes to this area of supply zone on the weekly time frame. All right, so that's our forecast for pound USD. Now we're going to move to the next one, which is gold USD. All right, let's look into gold USD. All right, beautiful. Gold, I'm going to make it as fast as possible because I don't want to waste your time. Okay, I want to be as precise as possible. What do we have with the gold? Gold, we can see price is struggling around these areas. Price took out some type of liquidity on the weekly time frame. Let's see if we can get more information on the monthly time frame. The monthly time frame, we can see a break of a structure, price trading above the last highs. It's always good to find much information rather than confused, not knowing what's going on. So we can see that price struggling to break this high here. Price created some type of inducement somewhere here on the monthly time frame, and we can see an area of shadow here, this low, and then this low. There is some type of shadow where we think price was rushed from. We can see the pressure coming from the bottom, price creating some type of sideways or indecision, and then price going up, creating a break of a structure. Price now is creating some type of inducement, not closing above this high. So therefore, price might continue to the downside. It comes over here, maybe test this, and then come all the way down here before it continues to the upside on the monthly time frame. But we're going to be doing more analysis on this. So this is the monthly time frame alone. So the monthly time frame, we have a break of a structure. We have price trading between this low and this high here, which is very, very beautiful. Let me color this real quick. This low and this high. Okay, now let's go to the weekly time frame and identify what's going on. All right, the weekly time frame, we can see price not closing above this area. It just traded and then took out all the liquidity. Remember, there were sellers selling from here, selling from here, selling from here, and there are also long-term investors who did not take profit yet. So they put all their stop losses around this area. So what happened here? Price came, cleaned them up, and then closed below the area here. All right, this is very important, guys. You better know what's happening on the higher time frame before you look into the lower time frame. All right, now let's go to on this time frame. Now we can see there is low, high, high, low, high, high, but then did not close above. So this becomes an invalid higher high. So we're still waiting for price to close above this structure here. So therefore, what we're going to be doing is this is going to be our last high low, and then we're waiting. Okay, we can see on the weekly time frame price respected this area of demand. Okay, now let's go to the daily time frame. Let's go to the daily time frame. We don't have a change of character. We have a liquidity grab or liquidity take out over here. Why will price take out liquidity? There's no offend. All of this is because the big banks, they need some type of liquidity. When they're buying, they need sellers, and when they're selling, they need buyers. So therefore, they need the liquidity in order to fill the rest of their positions. Okay, all right. What do we have here on this time frame? On the daily time frame, we can see price creating low, high, high, low, and then high, high, because price traded above this area here. We don't have a change of character on the daily time frame yet. So we have an internal break of structure on the daily time frame for gold, but it did not create any change of character after taking out liquidity, but that we might find that on the lower time frame. We'll find out. So now we are trading between this high low and then this higher high on the daily time frame. Price right now is ranging. Okay, we can see there's an area that's very important right here because there's an imbalance going on, and there is a valid supply demand zone. Price took out this low, this kind of low here. So this is a valid demand zone. So what is price doing now? All right, this area is already mitigated. We can see it. Price already reversed from there. Mitigation. This area is already mitigated here. We can see that. But this area, nothing touched yet. There's an insufficient price action going on this area. So price will eventually come back here before it continues to the upside, or is going to create a change of character and then continue to the downside. Okay. So right now, there is no position on the daily time frame because price is basically ranging between low and high. Okay. All right. So on the daily time frame, we can see what the price is doing. We have a range between this low and this high. We have sideways market. We have an area of demand zone / imbalance that's happening between here and here. So therefore, what I do is basically when I'm marking this, sometimes what I do is I mark the entire candle plus the gap that needs to be filled, which is until this candle low here. Let me zoom. You can see there is an empty gap between here and there, the high of this candle and then the low of this candle. And this is what we call an insufficient price action. So therefore, price has to rebalance and create a fair price action or fair value. Some call it fair value gap, some call it imbalance, some call it insufficient. It has different terminologies, so don't get confused with the names. It doesn't really matter, to be honest. We just call it imbalance or insufficient or just a gap or whatever. All right, so now let me go to the 4-hour time frame. Let's see what happened on the 4-hour time frame. After price took out the high, we can see price left an area of insufficiency right here because we can see this entire shadow needs to be mitigated, and price did mitigate a little bit of it, but eventually it has to go back and finish the entire thing. So what else do we have here on the 4-hour time frame? 4-hour time frame, we have a change of character. All right, a change of character. We can see price created some type of inducement here. Okay, first it went down all the way. Okay, and then there was an inducement over here. There was an engineered liquidity over here, and then we can see price just tapped on this small candle over here and then reversed in a very, very small manner. But this is not going to be enough. It's not going to be enough. All right, we need price to come to this is not going to be enough. Basically what we need is price to come all the way down here and then continue all the way up. Either it's going to break through or continue to the downside. Okay, this is what the 4-hour time frame is doing. So the 4-hour time frame, that's what's going on. Let's go to the 1-hour time frame and understand what price is doing right here. Zoom out. We have the change of character right here. We can see it very beautifully. If we zoom, we can see that this entire area needs to be filled, because this is a price action that's insufficient, because price has moved from this area very rapidly. There was a bullish candle, and then price has rejected, and the price pushed to the downside, creating a down move, and then creating a change of character after price took out the liquidity on the weekly time frame. So what we need is, on the 1-hour time frame, couple of things. Okay, number one, we have a low, high, high, low, high, highs. Okay, price can come over here, fill this entire imbalance, react. Okay, create some type of reaction, pull back to it, create a change of a break of a structure right here, come all the way down here, and then continue to the downside, creating a liquidity cleanup, and then reverse from this area of demand on the 4-hour time frame or the daily time frame. So we're expecting some type of continuation from here to the downside. Price pulling back, tapping on supply zone, price reacting to this area first, and then pull back, reverse from supply zone, and then continue all the way down to a demand zone, which is the range of the daily time frame here, right here, this low and then this high. So as long as the price is trading above this line, we're looking for a buy position, and as long as it's trading above here, we still look for a buy position. If it goes below here on the daily time frame, we're going to be looking for a sell position. But right now, the price action on this time frame, what we're looking for is, we're looking for a short-term correction to the downside, and then we're looking for price to go all the way up to fill this insufficient price action before it continues to the downside. Okay, beautiful. So that's my take on gold USD. So now let's go ahead and move to US30. US30 is pretty much very easy. It's not a very complicated pair, but the only problem is it is not an easy pair to trade when it comes to the new traders, because it creates a lot of, it moves very fast, very rapid, and it's not like the rest of the FX pairs. This is an index. This is not a a currency. This is just what do you call an index? 30 big companies get together and they created this index fund called US30 or Dow Jones. All right, what do we have on the weekly time frame? We have to investigate what's happening on the weekly time frame before we do anything else. The weekly time frame, we can see price taking out this area of inducement, price reversing from this area of demand zone, and then creating a break of a structure, so low, and then creating a high. This is what's going on the weekly time frame. First, we have to get the bigger picture before we move down to the lower time frame. We can see price creating some type of inducement right here. Price going down all the way, creating lower highs, lower lows, tricking the traders. High, low, lower high, lower low. You could trade this if you wanted to, if you knew where price will reverse. Okay, high, low, lower high, low, low, lower high, low, low, creating some type of inducement right here, and then reversing to the downside again from this area. Okay, and then we have a valid low, 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 high, low, low, and then right there. So this area becomes an area of invalid because price created an inducement and then took out the price. So this entire move will be one move. Okay, all right. So now where did the price reverse? Price reversed from this area of demand, since we have the break of structure which price closed above the break of structure. We can see price reversed from this area of demand zone, and then after that price created another break of structure. As you can see, there's a lot of manipulation with this pair, and we can also see that once the price created a demand zone, there was a change of character. Once we get this change of character, now price is building what we call, we have an area where stop losses are sitting right now. We have an area of liquidity. We have another area of liquidity right here / inducement. Now we know that price, if it comes back to this area, we're going to be looking for a buy position because price is trading between this low and this high on the weekly time frame. Let's go down to the daily time frame and see what's going on the daily time frame. Okay, on the daily time frame, we can see the change of character happening over here. We can see, if we go down a little bit, if we zoom out, we can see this area being mitigated, this area being mitigated. Now we're gonna go ahead and mark this shadow, which is very important because nothing has touched this area yet, because there is an area of imbalance and also a shadow or an area where price has moved very rapidly, creating an insufficient price action. So therefore, price, if it's coming back to this area, it will trade, and this is where the range begins, this higher low to this higher high here. All right, high, low short term, higher low, higher high, higher high, higher low, and then higher high, which is not complete yet. So what will price do on the daily time frame? First and foremost, we have an internal break of structure. Beautiful. All right, price will probably come all the way down here. If it doesn't react, there's a little bit of price taking out this zone. Price might short term react to this area, we'll see, and then continue, react to this area, and then continue, create a little bit of reaction around this area, and then eventually price will come all the way down here, pretend like it's going back up, and then go all the way down, taking out all this liquidity that's sitting on the daily time frame. All right, but at this time frame, we can see price higher highs, higher lows, higher highs, higher lows, and then eventually higher highs. So price, like I said, right now is trading above this area. So therefore, when it comes back, it will probably react around this zone, create a little bit of reaction, and then continue to the downside, create a little bit of reaction over here, pull back, and then continue to the downside, and then react around this area, and then continue to the downside, react around this area. Anytime price finds a higher lows or low highs, it will always react. It will do some type of reaction. Either it will create some type of inducement to trick the traders to think that it will reverse from here and might not, from here, which might not, and then from here, which might not. But it will create a reaction which you can take advantage of, but you gotta be very, very careful. All right, on the 4-hour time frame, what do we have on the 4-hour time frame? On the 4-hour time frame, number one, we can see, let me clean this up. On the 4-hour time frame, we have a few things that are very, very simple. We can see price breaking this structure, number one. And once it did, price reversed from this area already. We can see that. And then we have another break of the structure, which is a valid break of a structure, internal break of a structure. Now, candle has closed above it. New week is going to begin next week. Okay, price might come all the way down here. There's an entire area of imbalance or slash demand zone. Like I said, price will probably react, break through this area, or reverse from this zone and then continue to the downside until it reaches the daily zones, like this area, this area, this area, and then break through it to create liquidity grabs and inducements until price reverses from the higher time frame supply zone, demand zone, which is right here. So guys, I hope you learned something from this video. I really appreciate you guys watching this video. If you want to learn more about how to trade like the smart money traders, I have an ebook that explains all this stuff completely. 133 pages, a lot of details. I put a lot of time to it. You can get it for a lower price, and the link is going to be in the description down below. Also, if you're interested, you can join the free Telegram channel. The link is also going to be in the description down below. My name is Jamal. Thank you for tuning in. Until next time, be safe.